What's going on, PSS family and everyone that is watching this on YouTube? In this video, we are going to be talking about how you can start to improve massively how probable your POIs are that they are going to deliver the trade that you're looking for. So as stated in the intro, we're going to be covering how you can drastically improve your POI probability by using this simple system. So the basics of any movement in the market are, as we know, the trending moves, right? So a lot of the time, if the market is trending in a given direction, you're going to want to look for the POIs that sit below price to deliver new highs if you're in a bullish movement. And the same goes for obviously the reverse, which would be a bearish movement. If you're in a bearish trend, you're going to want to look for the POIs that sit at the best areas to deliver new short moves, right? Now, this is going to be the number one way that you're going to be able to start to already see good probability from your POIs. But this isn't what we're here to show you. Now, if you have a given move, for example, like so, you see price shifting higher, right? And you find an area, so for example, this gap here, right? Just purely for example, to get back down to this area to buy, you have to go into a short-term bearish trend, right? But the problem with this overall is when you get to this area, what are you doing overall? Are you just buying at this area and taking an aggressive entry? Because if you are, that can work, and it doesn't mean that you can't do this. But at the same time, how probable is it that you're just going to see an immediate reversal from this? Most of the time you'll see price pushing through. It may even continue bearish for, X amount of time. You don't actually know until you have confirmed it, right? So that's what we're going to be looking for. Whenever we have a POI that essentially is either a continuation or a reversal POI, we want to see something very obvious that we can start to add more confluence to our POI with. Now, what is that, I hear you ask? Well, the first thing we need to do is determine what kind of order flow we have coming into this area. As I stated, if we're in an upwards trend and price is delivering higher highs on a larger time frame and higher lows, we would anticipate a new higher low being created, therefore leading us into the next shift to the upside, right? So, because we understand this, we need to confirm that the order flow from this move coming down has shifted from the bearish move that it is currently in into a bullish move. So there's one simple thing that you can do. Whether price decides to deviate slightly lower and close inside of this area, that's another thing that we need to be flexible with. But overall, we're going to mark our nearest structural high that has been confirmed, so a high that has put in a new low, and we're going to wait for that high to be taken. Right? Straight away, that tells us that the short-term order flow is beginning to shift bullish again. Now, because we understand this, all we need to wait for is this bullish movement to be confirmed. So how do we confirm a bullish movement? You wait for a pullback. If this pullback is successful, then you are confirming bullish momentum to the upside. Now, there's a couple of options you can do to confirm your change in order flow or your POI's contribution to changing order flow. You can either wait for one structure to be broken and buy on the retest of that, which again is still, you're always going to be sort of on the back foot until you confirm your trend, right? So you can have step one, which would be break of structure, wait for the pullback, and then enter there. Or you can wait for structure to be broken in a bullish direction. When price runs back to the gap it's created, if it's created a gap, that's something that we'll go into in a second, then you can wait for a new high to be put in to confirm your trend. Why does that confirm your trend? Because you have point 1, which is a low, point 2, which is a new high, point 3, which is a new higher low, and point 4, which is another new high. So we've confirmed our trend change. And on that, you can wait for the secondary pullback, whether it's just to the POI that broke this structure, whether it's to the extreme. You'll have to wait and see what price delivers to you. But it is much more probable that you are going to see more bullish movements out of these areas if you wait for your order flow to change. So you're waiting for a break of structure, you're waiting for new highs and lows to be put in a bullish direction, right? So higher lows and higher highs. And then you simply wait for the final fill of the gap, and then you look to go long and follow the newly established trend. So it's not overall a new trend because we're looking at this as a collective. So that as a collective is a bullish movement, right? But overall, you would have to see clear confirmations to begin to validate your POI that you have identified. So let's go down to the live charts and we'll show you some examples of this. Right guys, here we are on the NAS 100 chart. Now this is a trade that I walked the Discord community through live on, I think it was a Friday, no, it was a Thursday. Walked them through live on Thursday and it played out absolutely beautifully. Now this is a great example of why we want to wait for the breakdown of a given trend that's taken us to a POI, because what it does is it allows us to capitalize on the most precise entry and also capture the largest risk reward that you can sort of go for when it comes to following trends. Because remember, if you're following a trend, you aim for the previous high or low depending on what direction your trend's traveling in. So with this right here, you can see that we had a clear bearish movement coming into the market. We didn't break down previous structures just yet, but overall the order flow was moving bearish, right? We left a clear gap with a POI. Again, the POI selection will be in a different video. And we came up with what? Bullish movement and bullish order flow. For this smaller section here, we have bullish order flow, right? So what did we do? We waited for price to tap into the area above, and we didn't enter until we were sure that the order flow had changed back to bearish again. Now, if we come out to the larger time frame, you can see overall we had put in some clear bearish movements beforehand. We weren't just following the short-term structure that we had. So just to keep that in mind, you know, we were following the overall structural movement. So now that price has come into our area, what are we looking for? So we're looking for price to tap in and establish a clear low that essentially puts in a new high. That's how we validate our lows. So what price does is it moves higher, puts in a short-term high, short-term low, short-term high, short-term low, pushes high, pulls back, tapping into the unmitigated area of price right here, and delivers a new high. Clearing the previous structural high creates a new high. So at this point, if we were to just look at what we have here, we have a clear bullish shift, right, into this area. So at this point, we were like, well, you know, nothing's been offered up yet until the drop came, right? Now, what is happening at this drop? Exactly what we spoke about earlier. We are seeing a break of structure from the previous order flow. We are now looking for a gap in the market to be filled. When you come down to the smaller time frames here, be great if I didn't keep rewinding price, right? When you come down to the smaller time frame, you can see we broke down, then we had a gap here. Now there was a couple of different areas we could have looked at here. Number one being the POI right at the top. But as you guys know, the pullback to the extreme of an area doesn't always happen, and it doesn't mean that we're going to get that 100%. Now, when we come onto the 15-minute time frame, it becomes a little bit clearer as to where we can see our gap forming overall. So if we take this back, and you can see exactly where we have our gap, you can see right there we have a 15-minute order block sitting proudly at the top of this move with a clear gap shown by the shift to the downside. Now this shift to the downside also shows us momentum, which is another thing that we're going to want to wait for. But overall, we've seen momentum coming away from this POI after a break of structure and a clear gap being left. So what can we do now? We wait for the pullback into this area. Now, as stated earlier, we can wait for the pullback and enter straight away off of this, or we can wait for a test and then enter on the next pullback. How you trade it is up to you. Where you are in structure is going to play a big part of this, but the majority of it is going to be down to how you follow momentum and overall order flow. So price comes back and taps in beautifully, delivering our aggressive, if you were, entry. So you put the stop above the high, and then you start aiming for previous structural lows. So you'd aim for the structural low down here. So as you can see, that would have given us a beautiful entry. Now in this case, we put in a new low. If we come down to the smaller time frames here, we put in a new low because we've shifted from this POI back down and put in a new low now. So you can wait for a retap of the unmitigated areas above. Now in this case, we're going to be looking towards this candle. See if this gets a tap. There is your tap. There is your shift. You can even wait for another tap on this area if you'd like. It's completely up to you how you're going to trade it. And then you can look to follow the newly established order flow down to the previous low, which is exactly where we're at. Now, as I stated before, it is not 100% that you are going to keep having taps like this where you have a gap, price taps it, you leave a gap, price taps it. It's not always going to deliver like that. So whether you enter off of the first breakdown and pullback, the second breakdown and pullback, it's up to you overall, guys. But using this simple breakdown and pullback rule, it's going to really help you to define how probable an order block is, or how probable a supply or demand area is, whatever it is that you're trading away from, support resistance, wherever it may be. So use multiple time frames to confirm what you are seeing in the order flow overall. Always remember that we don't use time frames to view price necessarily in a different way. We just use it to get more detail on how orders are actually flowing into the market. So don't lean on your smaller time frames too much. Don't lean on your bigger time frames too much. Use them all in confluence together. So guys, I hope this has been helpful for you to understand exactly the way that we start to look for our shifts in order flow, therefore making our trades much more probable. If you have enjoyed this video, make sure you hit that like button, make sure you hit that sub button, and I'll catch you all in the next one, guys. Peace out.